Hi there, I'm here to give you a routine weekly traffic light update on October 21st, 2016. Prior to going into the detail of the presentation, here are the disclaimers. Traffic light and capital appreciation point are the results of proprietary risk analysis model and should be used as a part of your due diligence process. Crystal Clear Indicator is not a licensed financial advisor. Investing involves risk. Here's the agenda. The scope is to review the traffic lights on S&P 500, a long-term indicator, and the intermediate indicator on traffic light Dow Jones and traffic light NASDAQ Composite. We'll be looking for bearish and bullish trades. Here's the current status of our traffic light S&P 500 on October 21st. The status is yellow, and the light has turned from orange to yellow in early September, and the current status is the same as last week. Let's look at the traffic light Dow, an intermediate indicator. This indicator has a good history showing intermediate signals, especially when the bullish red lines and bearish line cross over and showing divergence. I will zoom in the graph in the next few slides, but I also want to point out to you that this red line has been continuous descending characteristic from last week, and the green line continued to ascend. Here's the zoom in on the current status. The indicator is demonstrating bearish trades. Red line is descending and green line is ascending. This has continued to drop as shown, pointing out in the last slide that the red line continues to drop and the green line continues to ascend. In the next slides, I will demonstrate how these trades appear in the recent period. This is an example on the bearish divergence I talked about last week. Basically that as the price increases, but the money inflow is descending, the red line is descending, and that can be sustained. So eventually it will lead to a bearish crossover, and the market will correct as shown here. Dow correct from approximately 1700 to 1600. Here's just a slide on bearish crossover, and here's just a slide talk about bullish sign showing on the traffic lights, bullish divergence and bullish crossover. Basically, as a price in a bullish divergence, price drops while the money inflow line increases, and the bullish crossover is when the red line, money in, cross above the green line. Here's everything on the same slide for your reference. Here's a slide on the traffic light NASDAQ Composite based on October 21st data. This is give you a long-term view where we are, and we did make the previous, I'll say, maximum point for green line is pretty high as in 2008, and the red line continued to descend, the green line continued to ascend. Here's a close-up on a NASDAQ traffic light, and shown here, in addition to the bearish lines descending, there's a bearish divergence in NASDAQ. On top of that, we just noticed that bearish line has a higher low. Basically, it's a more bearish signs. This is why it stands currently. This slide is just to show that NASDAQ traffic light is demonstrates similar characteristic as the Dow traffic light. It had a bearish divergence and the bearish crossover. Then it had a bullish crossover. In summary, as October 21st, traffic light S&P 500 is in yellow. Traffic light Dow and NASDAQ is showing bearish signs. If there are any questions, please shoot me an email. Thank you.